Hey everybody, welcome back to another episode of the Buzzsaw Tax Tip Tuesday. Jared Duckett, Duckett Ladd, Dental CPAs and Advisors here with my business partner, Buzzsaw. Buzzsaw, what's happening, buddy?
Hey Jared, good man. How are you doing today?
Good. I pre-gaming, right? That's what I used last time. We're pre-gaming for the episode here. And this is, again, like we said, a lot of these topics that we're introducing or talking about, educating, here on these videos, what comes from our clients. And we're right here mid-September. Estimated tax payments is on a lot of people's mind. And so we just thought, hey, let's educate, our clients, but anybody else who wants to listen, what estimated tax payments are. Get this question all the time, but so I'm sure you do too, right?
Yep. Oh yeah. Yeah. It's a hot topic, especially here on 9/14, one day before the third quarter estimates are due.
Yeah, that's right. But real fast, I'll say it here at the beginning of the video, share or subscribe, get your notifications here, get a lot of questions from clients. Didn't see that video. That's how you see them, guys. Subscribe to the channel, hit the notification button, comes right to your phone. We send it to our email list too. But anyway, get that out of the way. Buzzsaw, estimated tax payments, what in the world are they?
Yeah. So estimated tax payments basically are something that help you pay in your taxes throughout the year, so you're not hit with a big surprise lump sum owed on tax day. So as you know, if you're a W-2 wage earner, you get your taxes withheld every paycheck. Maybe you have an S corp and you get some of those wages deducted and sent off to the IRS as federal income tax estimates in a way through your paycheck. Then the other part of that is your business income, which there is no withholding to the IRS for that income. And that's where the estimated payments come in. You can estimate your business income, any income outside of wages, and then kind of estimate what your taxes will be based off of that and pay it quarterly throughout the year, so you're not hit with a big lump sum come April 15th.
Yeah, so it's basically a way, think about a W-2 wage earner, like you said, comes through their W-2 and they're paying it in, their employer's paying it in from their paycheck on their behalf. Now, if you make money outside of a W-2, that's going to be taxed. This is a way to pay it in quarterly. Hit on those dates, Buzzsaw, if you don't mind. Typically, the due dates of the quarterly.
Yep. So quarter one is due April 15th. Quarter two is due June 15th. Quarter three, September 15th. And then fourth quarter is January 15th of the next year. Yeah.
So that's why it's timely. We're here in mid-September, working with a lot of clients on quarterly payments. So Buzzsaw, how do you know how much to pay in? What should your estimates be? How does that work?
Yeah, so there's kind of two things to look at. The first one is how much in taxes did I pay in the prior year? So if we're talking 2020, you need to look and see what you owed that year and how much income you had. If you had over 150,000 in adjusted gross income, you need to pay in 110% of that prior year tax liability in quarterly estimates for 2021 in this example. If you expect to have a lot less income in the current year than you did in the prior year, you can also take 90% of what you expect to owe in the current year as your baseline. So it's kind of a lesser of either 110% if you made over 150,000 or 90% of what you expect to owe in the current year.
Okay. So again, I can't do anything without examples. So let's say we got a dental practice owner out there, say they're an S corp, so they've got W-2 income, and then they've got income from their practice, right? Let's say last year, the tax, and I want to get this right here, the total tax, not their liability, but just their total tax for the year that they owed, right, was $50,000.
Yep.
In 2020. So if I understand you right, for 2021, let's say their income is over that 150,000 adjusted gross income. As long as they pay in 110% of the 50K, they are good. That's kind of that safe harbor we've been talking about.
Exactly. They'd have to pay in 55,000. I guess it would be for 2021.
Look at you, man. Quick math. I'd have to find a 10 key. Yeah. 55K. So they paid in 55K. They'd be cool. But if let's just say they're having a crazy year. Let's say now their income's ramping up. That safe harbor still in play. As long as 110%, they're in good shape, right?
Yep, exactly.
Okay. And then say it the other way. Let's say they're not having a gangbusters year and it's going down.
Right. And you're thinking 55,000, there's no way I'm going to owe that this year. I really only need to pay in, I expect to maybe only owe 30,000 in taxes. So you only have to pay 27,000 in estimated payments.
There you go. So that's the safe harbor, guys. 110% if you're up to 150 of prior years, 100% if you're below, or 90% of your current year liabilities. A couple different variations there. That's the question I get all the time is, and I'll ask you this. So the question I get all the time, first off, is how much to pay, right? It's all about projections, working with your CPA, seeing where your business is at. And then the last question I always get is, Buzzsaw, what happens if I don't pay? You know, am I going to go to jail? What happens? What happens if I don't pay my estimated tax payments? What's the ramifications?
Yeah, no, you're not gonna go to jail, but they are gonna hit you with some penalties. The IRS likes to do that. Now it's half a percentage point for however long your payments are overdue. So you know it's not huge, but who wants to pay more to the tax man than they have to? So you know, try to make your payments on time. Make sure you're hitting that safe harbor. So when you file that return, there's no penalties attached to it.
Yeah, and say that percent again. You said 0.5%.
It's 0.5%. Yeah.
Okay, so it's very, very minimal on the penalty side. And I have some clients who are like, nope, I'm not paying estimates. I'm going to keep my money, do something with it, make more of a return. That's fine.
Yeah.
You're gonna get the penalty. Penalty, what you're saying is the penalty is going to be less than what you can make over here. But to each his own. I have some clients who are like, nope, I'm not paying an extra dime in for a penalty. So that's where they stay on top of things and make sure they pay them all in at year end. Perfect. Kind of a simple subject or topic, but yet can get confusing, especially on that safe harbor. I confuse myself, to be honest, every year. But anyway, I hope that makes sense to you guys. If you have questions on that, let us know. But Buzzsaw, any parting comments here?
Yeah, I mean, just kind of get with your CPA, see what the projections shake out for the current year, and get a good plan in place on paying estimates or not, just kind of based on your situation.
Yeah, exactly right. For most of our clients, what we do is just, really the April. So you said the 415, 615, we kind of paying off prior year. And once we get down in here, we're doing the planning projections, especially for the 915 and 115 payments. We try to true things up a bit, make sure we're getting everything in that we need to, so the liability is not crazy or whatever the taxpayer wants. So anyway, Buzzsaw, appreciate you, buddy. Everybody out there, you guys have a great week. If you have questions, let us know. And again, subscribe to the channel so this comes to your phone and notification button. So Buzzsaw, have a good week, my friend.
All right, you too, Jared. See ya.
We'll see you guys. Talk soon.